Financial Arguments. Follow us on YouTube.
I am Kenneth Amaduri, and I'm really excited today because I got one of the most eye-opening economists out there providing the real data stripped from government manipulation, and it's none other than John Williams of Shadow Stats. And he's on the line with me today, and we're going to dissect the economy once again. John Williams, thanks for joining me again today.
Thanks for having me, Kenneth.
John, we just got done with the presidential debate, and we know the establishment is in hyperdrive trying to set up their preferred candidate, of course, Hillary Clinton. And my question to you is, would you say, or have you noticed, any additional manipulation being done to the statistics to assist in the establishment candidate Hillary Clinton getting into office here for the presidential election?
Well, it wouldn't be surprising if there was, but actually I haven't seen anything that's more egregious than they normally have on a month-to-month basis. Of course, we're coming up on two more very, very important reports before the election, and there you may see something. The first being the initial estimate of the third quarter GDP. The economy is in a deepening recession. That's still it's been a little bit above 1% the last couple of quarters, a little bit below or a little earlier. That's a phony number. Expectations are it's going to be above 2% next reporting, which will be next Friday, and that is. That's not realistic, but I'd be surprised if they come in with a realistic number for that. I mean, anything over 2% is nonsense, and I think we can get into why. The other will be the jobs report for September. That comes out on the first Friday of the month, which is second. So, excuse me. I don't have my calendar in front of me, but it's, I think it's the 5th or something like that. It's the first Friday of November. It's right before the election.
Sure.
And, they could have played around with the October report. There were all sorts of problems with the October report, but again, nothing unusually egregious.
Nothing out of the ordinary. John, we know that Obama is going to be the first president in history that goes down without a 3% GDP growth here. And how significant is that? With the fact that they manipulate numbers, they still can't get 3% out of this economy. What does that tell us?
Well, they've still gotten quite a bit out of it. I mean, keep in mind now, the economy started turning down in 2007, which is before Obama was elected, and it crashed. It crashed into 2009, probably the worst downturn we've had since the Great Depression. Now, government reporting indicates that the economy recovered after the middle of 2009, and today it's 10% above where it was at its pre-recession high. That can't be. I contend that what happened was the economy indeed crashed into 2007. You had a little bit of a bounce off bottom, but you never had a full recovery, and now the economy's turning down again. I think we're really in a protracted, long period recession. They may call it a double dip recession or a multiple dip recession, but the economy turned down. I mean, just as opposed to being stagnant or maybe inching higher a little bit, it turned down in December of 2014. We saw that with industrial production collapsing. We've had year-to-year declines there now for 13 months. Last 4 straight quarters, year-to-year decline. You've never had 2 year-to-year declines in industrial production and not been in a formal recession, and that goes back almost 100 years to the beginning of the series in 1918. That's a sign right there. Industrial production represents, in value, about 65% of the GDP. You look at the housing industry, that has not recovered. Even with the official reporting there, it's down, and then it's bounced back a little bit, but generally it's been stagnant. Within the industrial production, it did have 1 month of recovery. There, I think we had a little bit of a manipulation. It peaked, had a sharp jump in November of 2014, then it fell down in December, and then it kept contracting till it was well below the pre-recession peak. It hasn't recovered its pre-recession peak yet. And the largest component of industrial production is the manufacturing sector. That never recovered its pre-recession peak. And it's down something like 6% from its pre-recession peak now. The industrial production area is in contraction. Housing's in contraction. You have a number of much better quality private surveys than you get out of the government, such as the Cass Freight Index. Gives you an indication of freight activity around the country. That's a very broad measure of what's happening. That's shown a similar pattern. It started turning down as in terms of a smooth average or year-to-year change back at the end of 2004, and it's gotten worse. It's not recovered, never recovered from the collapse into 2007. Look at Help Wanted advertising, a private survey conducted by the Conference Board. They do this online now instead of advertising in the newspapers as it used to be. But you're seeing a pattern there of year-to-year contraction, which, although you don't have the full history of the series here, you've never seen anything like this before without the economy being in recession. And the history of the series, the last time you saw anything like this, one time, was the collapse into 2007. That's Help Wanted advertising. You look at Standard & Poor's 500, broad spectrum of the U.S. economy. Year-to-year change in revenues or sales adjusted for inflation. And I'm looking at trying to estimate the whole index. You're taking out all the effects of the share buybacks that you see by company, because when they reduce the number of shares outstanding, that tends to boost earnings per share and revenues per share, which is not realistic. But if you look at the whole industry, you're seeing year-to-year contractions again in a pattern never seen outside of recession. We're in a recession, yet they say the GDP has been in constant growth since the trough. Actually, there's one quarter where it dipped a little bit, but since the trough in 2009, it's just been in constant recovery. It's 10% above where it was at the peak before the crash. And I challenge you to find any major index that shows anything close to that. I mean, the industrial production, retail sales, the housing numbers, all those are components in the GDP, but they're not up there. The only growth that you're getting here is in phony statistics, such as they put out on healthcare, the Obamacare. All that is very heavily gimmicked. There's no hard numbers on it. A lot of modeling, guesstimating as to how we should define this as an economic measure. They've added a couple of things in recent years, such as what they call intellectual properties. So if you make a movie, all of a sudden you just added $2 billion to the economy, and that gets valued over time and depreciated. There are all sorts of gimmicks there to make the GDP positive, but no, they haven't been able to get it up anywhere close to average. And I think you're going to see, once we're past the election, that they'll let it take its hit, and you'll see an open quarterly contraction. We can have an actual recession declared without the GDP contracting. That used to be the definition: 2 consecutive quarters of GDP contraction, no special factors such as a truck strike. You had a recession. That's as defined by the National Bureau of Economic Research, which designed the GDP series back in the 20s.
Wow.
Is the defining authority on calling an actual recession. The government doesn't do that. And they abandoned the GDP guidelines some time ago because the GDP just gotten way out of whack with reality. They look at things like retail sales and industrial production and the GDP, but they can call a recession without having an actual GDP contraction.
That was a really good point you made there, that none of the individual components are making any significant highs or at highs, but of GDP, the components of GDP, but yet GDP is higher than it's been. And that really lends itself to the fact that they're fudging the numbers and manipulating things to get the numbers that they want. John,
just to be clear on that, there are some series that are showing the numbers are above their peaks before the recession. One is real retail sales. That's up about 5%, but the GDP is up 10%. So they're not, and the reason the retail sales are up is that they use an understated inflation number there in deflating the retail sales. They deliberately have reduced the reporting of the inflation rate to cut back on cost of living adjustments for Social Security and such.
Yeah. Well,
that's
also
the same number that they use in deflating the retail sales. And if you use an artificially low inflation rate, you get an artificially strong inflation-adjusted rate. That's one reason that the GDP is overstated. I figure it's overstated about 2 percentage points per year, which is about what it's been growing because of the way they handle inflation there.
You know, I don't know.
The understating inflation is a factor in the overstated headline growth, which is always adjusted for inflation.
I don't know the numbers specifically, but I know that during the 2008 crisis, there was a lot of, construction that just basically ceased. And you have the issue with real estate that, population continues to grow. And then if there's not new housing, there's a shortage of housing. And that's what I hear from realtors. And that's, it lends itself to why we're seeing rising prices in the real estate market, is because there just hasn't been enough growth in the building. And I don't know, do you have any insight on that you'd like to share that might be helpful in understanding this?
Well, there are two elements. One is you still don't have normal bank lending, despite all the things the Fed has done. So it's still difficult for people to get the type of mortgage they could get before the crisis, and the average person needs a mortgage to buy a house. So what you're seeing is that there's been a unusually large portion of houses, something like 30%, that are all when they're sold are all cash transactions. But parallel with the production, I mean the housing starts and the construction spending, which generates the new units, the sales are just not there. You can take the pattern of new home sales, you can take the pattern of existing home sales, you can take housing starts, you can take construction spending adjusted for inflation, smooth them out for 6 months. The series are very volatile month to month. What you'll see is that the series generally peaked in 2006, collapsed into 2009, and then have rebounded some, and they're stagnant, but they're still 50% below the pre-recession levels of activity. And that's big part of it is a lack of consumer liquidity, including lending from banks. I mean, the average income, median income, is not doing well. It's adjusted for inflation, household income is still below where it was at the worst of the recession in 2009 when you were crashing. And for the median household income, again adjusted for inflation, it's below where it was in the early 1970s. There's a serious problem here, and that's why Donald Trump has come to the fore here and turned the political system on its head. Because you have a great deal of the populace that's suffering financially. And one number I've looked at, and it's the specifics have changed a little bit over the years as they keep revising and redefining disposable income numbers. But if you look at real disposable income, that's the take-home pay after taxes, what people can spend, adjusted for inflation. When the year-to-year growth in that has been below 2.9%, and every presidential election year since 1932, and 1932 is as far back as they have comparable numbers here. Every election year that it's been below 2.9%, the incumbent party has lost the White House. Every year, every time.
Wow.
Current year-to-year growth in real disposable income is 1.8%. That would be suggestive of the Democrats losing this time around. It's why Trump has come to the fore. People tend to vote their pocketbooks, and where you've seen some elements of this in prior years, where the Tea Party, for example, rose in a similar type of circumstance. You really have had no significant policy differences between the various administrations going back to George Bush the first. And Trump has come along, and he's saying, I'm going to change the system. Here's why he talks about the trade deals. And yes, the trade deals are why you don't have real growth in income. There's no joking about that. It's a very serious problem. So he's offered some hope to people who are feeling the financial squeeze, and as such, everything else being equal, would tend to win the election. And you've had all sorts of crazy things going on in the last month or two here, but I'll contend that the average guy, if he's suffering financially, he's willing to put aside issues such as whether or not a presidential
locker room talk
or whatever. He's interested in someone who can do the job. You don't have too many options here. Secretary Clinton is promising basically to continue the same policies that have been in effect since the days of George Bush the first. And there's an interesting point, because with George Bush the first, he lost to Bill Clinton, and after one term, and he had a bad economy. Now, I know for a fact that the GDP numbers were manipulated back in those days in advance of the election to try and make the economy feel better, or look better. And a long story, but basically someone within the Commerce Department went out and talked with people in industry to get some sales reporting boosted to the Bureau of Economic Analysis. The Bureau of Economic Analysis didn't know what was going on, but it had the effect of boosting the GDP. Problem was the economy had not recovered, yet that's what the administration was touting. Bush lost. Bill Clinton said the economy's stupid. Guess what? Main Street USA, the average guy, didn't need the government statistics to tell him what was happening. He knew what was happening. The beautiful thing about our system is I find that the average person has a pretty good idea of where underlying reality is, and if you think you're seeing overstated economic statistics or understated inflation numbers, you're probably right. You've got common experience. You see what's happening in your business, in your community. You talk with people around the country, so that even if they rig numbers the week or two ahead before the election to make it look better, I don't think it'll have much impact, because the average guy who's feeling the economic pain is not going to be feeling any better, and he's going to suspect that the numbers are rigged.
You know, John, we talked about the recession here, the crash in 2008 going into 2009, and one of the things that the left brings up is that, you know, Obama dealt with the economy crashing on him, and they bring up the number 800,000 jobs were being lost a month during that crash, and those are government numbers. And I just wanted to ask you, Do you have different numbers than just 800,000? Because those are government numbers. Were they worse than 800,000 a month in 2008, 2009?
Well, there are two measures of employment. You have the payroll survey, which is the one that gets the headlines, tells you how many jobs were created. Oh, jobs are up by 200,000 or 140,000 or whatever. That's a nonsense number. It has biases built into it, upside biases of about a couple of 100,000 jobs a month. So if you knock off about 200,000 jobs from what they're reporting, you're probably getting an accurate estimate there. But that series is flawed in at least three ways. Number one, in terms of those biases, that goes back to coming out of the recession in 1983. I was in business in those days, and the Bureau of Labor Statistics started adding in a monthly bias factor of about 160,000 jobs a month. I talked to them about it. Why are you doing this? And they said, well, we suffered the political embarrassment of underestimating the jobs growth coming out of the 83 recession. So we've put in this upside bias factor that'll keep us from underestimating the jobs growth going forward. Well, that just survived month after month, year after year. People started asking questions on it, so they redefined it. Now it's called the birth-death model. They used to call it the bias factor, an upside bias there. And that's those numbers are always overstated on a month-to-month basis. That's one problem. Number two, they count jobs and not people. So that if you can't get a full-time job, but you get two part-time jobs, you're counted as two jobs. They count jobs, not employment, not the people. So what you've seen is that where more and more people have been forced into part-time work and multiple part-time jobs, some of the growth in that payroll survey has been with people getting multiple jobs as opposed to gaining full-time employment. The third factor is that the numbers are not comparable generally month to month. They use they seasonally adjust the numbers. You need to do that because you smooth out the trends that you get from cycles tied to, let's say, the year-end shopping season or schools opening or closing. Those happen year after year, and you get ups and downs with that. So they try to adjust the numbers for that. To do so is legitimate. What they did just before the crash, economic crash, was they went to what they called the coincident. Coincident seasonal adjustment factors. They revise the seasonal factors every month for the latest month stated. It used to be they'd take the last 5 years, and then they'd project the seasonal factors going forward for 6 months or a year, and those numbers would be fixed. But now they recalculate the seasonal factors each month. It's called a concurrent seasonal factor. And in theory, that's okay. The problem is that when you do it, you're revising the entire history of the series. So all you have to do is you just revise the series historically each month so that you can see the numbers on a comparable basis. Well, with the payroll numbers, they keep the prior month and the month before on a consistent basis, but all the earlier data is not consistent with what they're reporting, and that gives you major distortions in the numbers, and you can see sometimes the gains that you're seeing in the current period are really being shifted from earlier periods because of the changing seasonal adjustments, and that's distorted. But that's the headline payroll survey, the one that gets the big press in terms of the jobs change. Now, there's a second survey called the household survey, and out of that you get the unemployment number, and you also get an employment count. Their employment count only counts an individual once, irrespective of the number of jobs he holds. And the unemployment rate that's generated there is basically the ratio of their count of unemployed against the labor force, where the labor force is the total of the unemployed and the total of the unemployed. Now, if you look at the headline numbers, here again we have at least several layers of big problem. The unemployment rate peaked at 10% at the worst of the downturn. Now it's at 5%, basically.
Sure.
And that's big improvement. At least it normally would be considered a big improvement. But the issue here is that they back in after 1994, which is when NAFTA came into effect, they redefined the unemployment series and such so that it would not show the negative effect of the trade deal in the headline data, or at least it would minimize the negative effect. So where they had what they call discouraged workers, these are people who had given up looking for work, and they counted them as long as they were discouraged workers, effectively, for as long as a person's unemployed and wanted a job. That was pre-1994. In the post-94 era, which is where we are now, to be in the headline unemployment, you have to have looked for work in the last 4 weeks. If you haven't looked for work in the last 4 weeks, you're no longer counted in the unemployed that you get in the headline unemployment rate. They'll count you as a discouraged worker if you've looked for work in the last year. But after a year, they no longer count you as a discouraged worker. So that where they have their headline number, which is they have 6 levels of unemployment. U3, unemployment rate 3. U6 is their broadest measure. That's running up around 9.7% right now, where the headline number's down at 5. That includes these discouraged workers, but only people who've been discouraged for less than a year. After a year, they're dropped from the numbers. They used to be included in the numbers going forward. I estimate the unemployment rate the way it would have been based upon the way they measured the numbers back before 1994, and it's just more than just a change in counts and discouraged workers. They redefine the questions. Measuring the discouraged and displaced workers displaced by trade deals and a real bad economy, you're up around 23% unemployment. But the reason you've seen the narrowing of the unemployment rate is not the normal good news, and this is the headline unemployment rate. The good news is usually, you see the unemployment rate dropping, that's because the number of people who are unemployed are dropping and they're getting jobs, so you're seeing the number of unemployed dropping and the number of employed increasing. More often than not, you haven't been seeing that happen, because the number of unemployed has been dropped because people have given up looking for work. They've become discouraged workers, and that dropping the number of employed on that basis will also reduce the unemployment rate, given that that the number of unemployed is much smaller than the employed. So a lot of the improvement in the headline and unemployment rate here is not the good news that the unemployed are getting jobs, is that they've given up looking for work. And again, these are areas of pocketbook discomfort that would normally overturn the incumbent political establishment. And irrespective of the crazy things you're seeing in the national polls, and it's very difficult to know what you can trust out there, but there's an interesting pattern that was seen of the consumer sentiment surveyed by the University of Michigan. Now, this is not a political poll, but and they have actually 2 surveys in the month. They have an early month survey and then a full month survey. Early in June, they had a big jump in consumer sentiment, positive move. It wasn't because of economic activity. It wasn't because of the stock market. Those are factors that can affect it. But all of a sudden, the outlook had brightened. What had changed was that Trump was had been declared the presumptive nominee. Early October, big plunge in consumer sentiment. Again, no big change in the economy. The economy is sinking. But we haven't seen big shifts here. But that was right after the bad old audio tape on Trump had come out.
Mm-hmm.
And I think people saw that as maybe lessening the chance there's going to be a change, and that was affecting the consumer sentiment. You have very strong feelings here that are not necessarily being reflected in the headline political polls. I would not. I'd be very cautious about making predictions going ahead based on what you're getting in some of that those big name polls that are work for the establishment.
Yeah, put out by the Clinton machine here. John, we know that the rich have disproportionately benefited from central bank expansion of their balance sheets, the money printing that has gone on, and the poor and middle class have suffered the brunt end of that because prices have gone up and incomes have not, and people have lost jobs, so on and so forth. But specifically minorities, I wanted to ask you if you have any statistics that shows, what the minorities have been dealing with. And the reason why I bring this up is because, President Obama was supposed to be the president that was going to really help and give African Americans specifically a hand up, a helping hand up. And we haven't seen that. And things have been getting worse, and race relations have been worse. And I would not have expected this under an African-American president to see so many problems in the minorities and the communities. And unfortunately, there has been a zero benefit with Obama being in office for these groups. And I just was wondering if you had any specific statistics that would shed some light on this issue.
Well, it's unfortunately there's a dichotomy there that was there before and has persisted, probably gotten worse. If you look at the as bad as the numbers are on average, if you get into those areas, you're looking at something that's you can multiply by 2 in terms of or more in terms of severity. Let me give you some interesting things that have happened there over time. Back in the days of the Bill Clinton administration, the poverty survey that's conducted each year is piggybacked on the March unemployment survey, but it's what they call the current population survey conducted by the Census Bureau, and that's in March of one year, and then it's published in. The March is for the prior year, and then the numbers get published towards the end of the year. The Clintons their administration was probably one of the most creative with economic reporting. Now, in terms of that current population survey, which gives you the poverty report, and which also gives you the unemployment report, the base is something like 60,000 households that are surveyed each month. Just before the key political survey on the poverty that would have come out in time for Bill Clinton's reelection, they reduced the number of households being surveyed by 10,000, from basically 60,000 to 10,000. And most of the households that were cut were in the inner city. Mm. Now, I called the Census Bureau on that. They said, "Oh no, we have ways of modeling that. It's not going to affect the quality of the numbers." Yeah. Well, of course, the reason they were doing this was they were changing. That they were doing special surveys for healthcare. And this was actually went through Congress, and Congress said, "Yeah, go ahead and do this." But I can tell you that the practical effect of the changes that they made here were that all of a sudden you got an improvement in the black unemployment rate. Inner city unemployment went down, and guess what? The poverty rate actually went up for the first time in a while when they came out with a report. things like that can be done that'll affect a number. People doing it know it's going to affect the number, but it was all done above board and everything was discussed. What I found interesting was that at the end of of Clinton's term, they went back to surveying the 60,000 households, and again called them on it. This again was tied to surveying for health care. But the effect was that all of a sudden the unemployment rate spiked, and that was just in time to give George Bush a recession that actually started back in the Clinton administration. But again, when they start shifting around the surveying out of the inner cities, they can make those numbers look better or worse at any given time. And I just heard recently that they've been because of surveying problems, they're reducing or shifting the surveying around again, moving out of the inner cities. So I expect you're going to see some improved numbers there, but it doesn't reflect reality.
Wow. Yeah, no, I totally agree with you. And whenever I listen to you and have these conversations, I'm just blown away. There's just no real trust that you can have in these surveys and these polls. And getting to that, actually, I want to ask you one final question here. Do you think Donald Trump has an actual chance to win and beat Hillary Clinton? I know that the economy would suggest so, but man, she's got the Clinton machine behind her. I'm curious to get your insight if you think he's going to win here in less than 20 days.
Actually, that would be my betting. The polling, I've been working with these numbers since the early 80s, and I was associated with, we never worked for each other, but we loved each other, and we each were coming up with the same general analysis, but he from his surveying of the population and mine with my modeling of economics. This was a fellow by the name of Al Sindlinger, surveyed the consumer on a daily basis, 5,000 telephone calls a month, very substantial. He did surveying for the large auto companies, but the guy who put him in business was Herbert Hoover. Al had known Hoover since the 20s when he's at the Commerce Department, head of the Commerce Department. It's Hoover. And Al had, he was a young guy then, and he went to work for one of the big movie producers, doing surveying on their movies. And what they'd do is they'd bug the restrooms in the movie theaters to see what people were discussing, and if they liked the movie or not.
Wow.
And so this is how they got some feedback on the movie. This is 1920s, early 1930s. And what he found was he's also getting comments on the economy. And from that, he could tell the economy was really tanking. This was after the crash. Now, back then, nobody really knew what was going on. Communications around the country are not quite as they are today. People knew the times were bad, but not as bad as they really were. And he shared the information with Hoover, and Hoover was impressed with it. And after World War II, the modern economic reporting came into play. You'd had the industrial production series that now goes back to 1918 and is again signaling a recession. But aside from that, there was very little in economic reporting. Most people relied on what the stock market was doing as an indicator. So Hoover put Al into the surveying business. He started his company with him to survey the public and to share the information with the sitting president. Because Hoover never wanted another president to not have a good idea as to what was going on in the economy. So Al was consulting the presidents for a number of years. But in his survey, he could get a real good sense of what was going on. And also was an honest counterfoil to some of the numbers being put out by the government. But he always looked at when he got into surveying the presidential races, he'd give you an honest opinion, but he knew how the game could be rigged. He could rig it if he wanted to. And you have people here that have a big vested interest in seeing that Donald Trump not be elected. And you're seeing very heavy rigging of many of the polls. But there are a couple of polls that have been reasonably good over time, like the Rasmussen poll. That's one I followed for years. And that's showing it a pretty much a break-even race at the moment. I've also seen some interesting comments, and it's consistent with what I'm seeing with the consumer sentiment numbers, which are not being surveyed from the standpoint of who are you going to vote for president, but where you're seeing changes there that suggest that there's some people real excited about or disappointed in the way the polls are going. They think someone's going to win, and there's going to be a change. You see the sentiment rise, and parallels are being drawn with the Brexit survey, where all the polls and all the demonizing had been against Brexit. All the polls were showing that Brexit was going to lose handily. And when you have the demonizing, which you're seeing now with Trump, you have a pollster call up someone, they may be a little reluctant to say, yeah, I'm going to vote for Trump, or, oh yeah, I'm backing Brexit. But then they go ahead and do what they want to do. Those factors actually come into play. And it's what the analysis, and I forget who did it, but it's out there. You Google it, I'm sure you can find it. The betting parlors in London, like Ladbrokes, they have they'll give you odds on a presidential race. They gave people odds on Brexit, and what happened was all the big money was on Brexit going down to defeat, and all the big money is on Hillary Trump beating Donald Trump. But if you look at the actual number of bets, and these are the people who are voting, the bets for Trump, in favor of Trump, and the bets in favor of Brexit. I mean, the number of bets, I'm talking the monetary bets, which is an indication of how people were looking to vote, was something like 65% for Trump and about 65% for Brexit. And if you use that as a guide, that was a much better predictor of what happened with Brexit than just the betting odds, which was based on the total amount of bets. And there they had very heavy bets, big money in there, going against the ultimate outcome.
Well, it's been highly entertaining for me watching what's been unfolding with the presidential election, and I think you're right. I mean, these polls are so highly manipulated, and even you see these internet polls where people are much more free to vote their conscience because they're not feeling judged, because there's kind of a connotation or a stigma when people say, "Oh, I'm a Trump supporter," let's say, and they know that kind of carries around like this bigot type of connotation, or suggests some politically incorrect sentiment in just the mainstream media, because that's what the mainstream media has painted him as. But John Williams, sir, just your final comments here. Thanks again for coming on the show. I really appreciate you taking the time and sharing your insight with us here at Crush the Street. I'd love to have you back on here in another couple months. Final comments before we say goodbye.
Thank you again for having me. Again, the one real positive thing I can say about what's happening is that the average guy's got a pretty good sense of what's going on, and ultimately the average guy's going to win out here.
Thank you, sir. Everyone will have the link to Shadow Stats in the description area. Thanks for tuning in. We'll talk soon.